What's up, everybody? Michael Silva here. I am back from a small vacation in Arizona. Had some fun golfing and shopping. Good old times, great old memories. But I am back here in Sacramento, happy to do some technical analysis on the S&P 500. We are going to go over the daily time frame today. We are going to go over the 30-minute time frame today. And then I want to peel the curtain back just a little bit on the recent jobs report. Let's get into it. Welcome back. As you all have probably heard, the unemployment rate fell to 11.1% here in June. A victory-setting moment. Nothing but hurrahs and great news across the board from multiple different news sources. What I would like to do is peel that curtain back just a little bit, just to understand a different viewpoint. Now, some of you might be thinking, well, that was a very, very good unemployment rate. How can you potentially look at it as something bad? Well, here is one of the things that I want to point out. Here is the Payment Protection Program's fine print, and as you can see, employers, in order to get loan forgiveness, had to bring back the employees by June 30th. Now, when you encourage employers to have forgiveness on loans, meaning they don't need to pay them back, and you put something in here like this where they need to bring them back by June 30th, well, what do you think is going to take place? It's going to encourage the behavior to bring employees back to the workforce, even if that they cannot keep them around after the loan has been forgiven. Some companies have already stated that they burned through the funds from the original time that they got this loan in April. The next chart I wanted to point out that had to do with the jobs report was actually the spike in COVID daily cases. Now, the jobs report just came out, but in order to get the jobs report out, they need to compile the data. And in order to compile the data, they have to run surveys. And the week that they ran the surveys was here at mid-June. Now, as you can see from that point on, there was a huge spike in daily COVID cases. Now, the reason that the media has been portraying what has been going on is simply because we're doing more testing. Now, that might be very accurate, but I wanted to point out that when the economy opened and people are starting to go back to work, we're also seeing that large spike in daily COVID cases. Now, what does this mean? Well, I just wanted to point this out because this is going to start to put more pressure on individual companies, corporations, state governments, local governments, governors, politicians. This is going to get increasingly more difficult to handle. Now, there's already been people talking that the only way through this is through herd immunity. And the total cases in the United States, we're only at just about 2.5 million, somewhere right there. Don't, give or take a little bit. But there's 300 plus million people in the United States. So this daily case rate of 40,000, so forth, on average right around there, could potentially get significantly higher. And if we close the economy down here in this range where we had an average of around 25,000, it's going to increase a lot of pressure on the Federal Reserve, on the Treasury Secretary. It's going to be a very interesting, wild ride, and I think it's going to take a lot away from the V-shaped recovery in the economy. Now, that is really all I wanted to point out as far as the jobs report. Other than it being extremely good, I don't think it's really a victory unless if you're just looking at the numbers themselves as a victory. If you peel back the curtain just a little bit, it does seem to be a victory on very shaky ground. Now let's just go ahead and hop into the technical analysis of the S&P 500. Now, if this is your first time watching my videos, I have two rectangles, okay? The red one and the green one. The red one is the area of resistance known as the bear's camp. The green one down here is the area of support known as the bull's camp. Now, if you do watch my videos, you have not seen these patterns drawn out previously. This is something new that I wanted to kind of bring to the table just to give you an idea as to where we might see the market heading or moving. The first thing that I wanted to call out was really this big red trend line going this way since I'd say early June. As you can see, we had the market tap right here on it, and then it kind of pulled up and then came down through these levels right here and right here and right here. And then when it broke through, Notice how it acted as resistance. And then as you can see more recently, the island reversal pattern that we've been talking about right here also got hung up at that exact area of the trend line, and it acted as resistance. So this trend line right now is currently acting as a major area of resistance. So not only do we have this red rectangle, which we've been calling the bear's camp, it falls in line right here with the trend line. The next three patterns I want to point out are some rising wedges. Now, as you can see, these rising wedges have been going up since the mid-March low, and it came up all the way up here to reach a pretty significant high of 32, 33, and then boom, we saw it break through that trend line, come all the way down to test the 3,000 range, which offers up a significant amount of support. That was an area where the 200 period moving average was hanging around, still is to today. And as you can see, it came just a tidbit lower, about 29.65, and it created another rising wedge pattern. And when it reached right up to this area, these three candles right here, we called an evening star pattern, and it reached just a little bit lower to our target, which we were talking about, of 3,000. And these last 4 days have been a rocket ship back up with pretty much no hesitation to that major area of resistance on the bear's camp of 31.50. Now, why I wanted to point this out is because it seems like it's forming another rising wedge pattern. Now, this week is going to be fairly short. I think tomorrow is a half day in the markets, and we have the 4th of July weekend coming up. So we'll really get an idea if this really is a rising wedge here next week. But keep in mind, it does have this opening similar to this, and then it just touched the above trend line. It might potentially be able to reach up higher than this, moving into the bear's camp. And if it does, which we've kind of been saying, it might come up to close this window here at the island reversal pattern, which was 3180 up to 3200. It's kind of a zone. If you see today's price action, it is a inverted hammer. It was a very bullish day to start, but we'll get in the 30-minute time frame just to see what really took place. Now, the high of today was about 31.66, and if you look to the left of the chart and look at this island reversal pattern, it did touch, it filled the gap for the first part of that island reversal pattern. So I still think that that's not a full gap close. I think we need to go a little bit higher in order to confirm that that is a full window close or a gap fill, whatever you want to call it, for this island reversal pattern. A lot of analysts are already calling this the market top for June. Now, if you don't know what a rising wedge pattern is, it is a bearish pattern. And the reason why it's bearish is because it goes up dramatically quickly and coils up very tightly and has to retrace. It's kind of an overextended move in a tightly wound pattern, and then you see a retracement. Keep in mind, not all patterns play out perfectly, but what I do find interesting about these rising wedges is it has been playing out pretty well, especially when it runs into this area of resistance. So we have a major area of resistance trend line here, then we have the bear's camp right here. This is going to be a lot of pressure for the markets. And what I mean by a lot of pressure for the markets, it's going to be very hard to break above it and make this then support. But if it does get above it, by all means, I do not see why we couldn't hit the market high and potentially go higher. It does seem like the stock market is being propped up by liquidity given to us by the Federal Reserve. Now let's go ahead and hop into the 30-minute time frame to map out an area of resistance, support, and where we might see the market head into tomorrow. All right, so we are here at the 30-minute time frame. We're going to map out some areas of resistance and support and just kind of talk about the price action of what took place today. Now, this blue vertical line right here, I'm about to delete, but I wanted to point that out because that's where the day started and then moved forward from that point. Each of these candles represent 30 minutes of data. So as you can see, today we had this big gap up right here to 31.43. And to talk about what we said on yesterday's video, when we have these areas of resistance and support and the market doesn't want to have to deal with them through the day or retest them, they typically just gap right over it, which is exactly what it kind of did. It didn't gap quite over the 31.50, but it did gap up to 31.40 3 or 31.40, let's call it, because it's, you know, just for rounding purposes. And then it started moving higher into the day. It went as high as 31.65, and then really the market started pulling back from that point. So this typically happens. There's never a very specific line as far as support and resistance. It's typically a web. It's like a zone. And I mean, very rarely does it ever tap and then it's like a perfect movement. Like as you can see back here in the chart, it literally just tapped right on 3,000. It was like perfect. So we were saying that it'd come down to 3,000. I didn't think it was just gonna hit it, just, you know, tiptoe right there and then move all the way up, which, like I've been saying, irritates me because I didn't have my trading gear ready to make that execution on the trade to the long side, which we were talking about. Now, the other side of that is we've been saying that a good short position would probably be at the 31.50 marker. With this type of gap up and that move up, that is bullish, and it went higher and higher, right? But then we saw the pullback started taking place, and then it went as low and then filled in the gap to basically where this candle was, the high of this candle, and started moving higher and then got rejected really at that 31.50 level. It was back in play from that point. It was rejected here, it was rejected there, and then towards the last hour of the day went as low as 31.25, let's call it, and then closed not too much higher at 31.28. So clearly the level of resistance to keep an eye on is still going to be this 31.50. That looks like it's holding up as an area of resistance. The next area, I'm gonna just call it out as this trend line right here. We've been saying in the island reversal pattern on the daily time frame, it goes as 31.80, I believe, up to 3200. And I'm just gonna keep that trend line up here for right now so you can keep an eye on it yourself. Now, as an area of support goes, I would say the area of support to keep an eye on is going to be, give it some room to breathe. It'd probably be right here in this area, 31.14, which I believe we plotted out on yesterday's video. I think we called it 31.15, and the reason really there is because it's clearly acted as an area of support from this part of the chart, but it also acted as resistance here, 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 and then also back here in the chart too as well. So 31.15, it will be our support going into tomorrow. Our resistance will be 31.50. And as you know, keep an eye on these purple lines right here. Those are our trend lines for our rising wedge. If it does stay within this pattern and get tightly coiled up, we might see that aggressive pullback before we potentially see a run up higher. It's very likely on the daily candle that took place today, it looks like a reversal candle, but keep in mind there's still a lot of liquidity in the markets. Will the Fed let the market fall past 3,000? Well, we're gonna have to keep an eye on that, and we'll have to find out at a later date. That's all I have for you on today's video, everybody. Have a good day, stay safe this 4th of July, and I will see you on the next technical analysis update. Bye. One last thing before I get going, I just want to say thank you to everyone that has been leaving kind words in the comment section, that have been giving me thumbs up, subscribing, and just basically overall supporting my channel just by watching and sharing. These are just a handful of some of the nice comments that have been coming into my channel. It makes me smile. It makes me feel extremely grateful to have such a nice audience watching in, especially at such an early stage of this whole YouTube experience that I'm kind of on. So thank you so much to everybody out there. I really do appreciate it. Have a happy and safe 4th of July weekend. I will see you soon.